by the rivers of Babylon, where he sat down, and there he went, when he remembered Zion. For the wicked carry us away captivity, require from us a song. How can we sing King Alpha's song in a strange land? So let the words of our mouth and the meditations of our hearts be acceptable in thy sight, override.
1, 2, 3. Give one heart, get back to. I don't know. Have you had your morning constitutional yet? It's an odd time. Why is it odd? Ever the upbeat. Jack the upbeat. But welcome, Jack. That's great. Carnegie's paper. Painter. I'm going to I want to read to you about this, about gold, of course, and then the Anson funds, wire fraud charges, money leaving the fund. And this is the bonfire, the Vanities article that I want to go over. But we'll talk about anything you want. To answer Jack's question, there's nothing happening. It's just I'm having a cup of coffee and, I don't play golf, so I get on and have a cup of coffee. Buongiorno. All right. Anson funds, an oldie but goodie. I don't think this is the one that it's amazing. This group, which probably backs up Lynn Partners, Anson Funds, has been doing this for years. Andrew Left was a big name in the short selling world. They call it short selling. It's just stealing. It's just thieving. It's just cheating. It's just when you do business with Andrew, you have nothing left. Not too long ago, he was parading himself around as the white knight of the markets, gallantly exposing corporate fraud and serving as the champion of the retail investor. It's all lies. It's all lies. And that's, sometimes I get so frustrated because you guys have good hearts. You believe the markets are there. There's some integrity in the markets. They're not. They're set up by this handful of guys that keep pushing the boundary. They get you focused on emotions. They accuse you of this or that, horrible things from the 40s. All sorts of things, but they keep moving it forward. And their goal is to steal everything they can. So Andrew Left is been shown to be quite the opposite, a criminal and a con man who destroyed good companies for profit, conspiring with his business partner, Moaz Casam of Anson Funds. Well, Moaz Casam, Andrew Left, If I notice any similarities there, I'll be accused of something. But the real similarity is they're both criminals. In a recent interview with Bloomberg, Left portrayed himself as a broken man, living in fear of losing his freedom. The problem for Andrew Left is that the DOJ and SEC already know he is guilty. But they're not going to, that's the thing. The SEC knows the Kramers are guilty, but the SEC's purchased. The Kramers are just bird dogs for someone bigger, or they're castaways. But in any event, the someone bigger doesn't want the crime to see the light of day. You get someone to sign off at the SEC, hey, no harm, no foul, never do it again. And Kurt Kramer is God for another day. It's just like Gotti. The problem for Andrew Left is that the DOJ and the SEC already know he is guilty. This is an article from last year. They have everything they need to throw the book at him. Everyone on the street knows that Left was the analyst involved in the 2 trades Anson was fined for. 2 trades. God, guys. And then there's Mark Cahodes. People should understand how seriously the Department of Justice is taking this, as their California division of the Department of Justice is one of the most powerful and accomplished within the DOJ. One of the reasons it is believed this case was handed to them is because of the racketeering nature of what Anson Funds and its partners, such as Andrew Left, are doing. Anson Funds takes 85% of the finger motion deal with Roth Capital. They behave like a mob, that's right. They engage in wire fraud, that's right. Money laundering, that's right. Market manipulation, that's right. As well as a host of other crimes that potentially fall under RICO, the Racketeer, Influenced, and Corrupt Organizations Act. Citron Research and Muddy Waters might be the headline names, but Anson Funds is the head of the snake and the main target. People need to understand that the DOJ has a 97% conviction rate. They just take their sweet ass time about it. And anyone in their crosshairs isn't getting away lightly, I suppose. Well, now with Trump, I think it's probably true again. In this piece, we'll look at the number of transactions that Andrew Left worked with Moaz Casam and of Anson Funds that the DOJ might not know about. We detail how their partnership thrived and made both of them a great deal of money. Stolen money. We have voice recordings of Moaz Casam. Genius Brands. You think that guy was part of it? Do you think he's either an idiot or he is part of it? But he was a setup to come take your money. As our little group of people were investing, there was money, there was retail. Anson Funds sent Genius Brands. My battle, short selling is my battle, $1 billion battle, dye my hair, British accent, and I couldn't give two turds for what happens to your money. I just want to be able to fly to Thailand and fly to London and be important. Moaz Casam has been doing business with Andrew Leff for years, with Leff tipping off Moaz before the release of any reports, regardless of whether they were positive or negative. Sources on Bay Street have told us that Anson used to run money for Leff, and they also had a balance sheet arrangement, although we have not been able to confirm this with documented evidence. As our investigation continues, we have been fortunate enough to have developed a former Anson fund source who maintains insider access. And this is how they traded Tilray. He got the second largest allocation when the stock went public. But I'm going to skip Tilray. Tilray Malou. And then there's Aphria. I'll skip Aphria. Because, you know, the Andrew Leff con. The next steps in Moaz Casam's operation against Aphria would land Anson funds in the spotlight. When Aphria stock plunged, they all do, Moaz Casam saw an additional opportunity to gain from the upside precisely because the stock had dropped lower than planned. To ensure additional gains on this schemer, so in other words, they gave money, destroyed the company, it went too low. Moaz Casam contacted someone close to the company with his own offer. His offer, what would happen if the biggest short seller in the world became the long buyer of Aphria? Do you see how they cheat? The answer, the stock would go up. To make this happen, Casam paid Andrew Leff of Citron Research to get in touch with Aphria management. Hey, call the genius at Genius Brands. And initiate positive coverage on the stock. On 7 December, Leff wrote the following tweet: "Congratulations, $CRON, a floor has been established. Time to rethink all valuations. Aphria, $APHA, is compelling on all metrics. Canadian footprint too large to ignore. Look past the noise. Stock should see US $10. More details to come." That tweet sent Aphria stock soaring, as noted by capital markets follower Benjamin Smith. Wow, at Citron Research moved AFA up 9.37% in seconds with this tweet. Following that tweet, Leff released his report just a week later on December 18th. Over the course of the next month, the stock moved up with the help of Anson's fine-tuned promotional machine. During this time, Moaz sent the following message to various people in management and large investors in Aphria. Quote, "My boy Andrew Leff to the rescue," unquote. Quote, "See, I told you I'm your biggest supporter. I've hired Citron to pump this stock. Watch it go," unquote. That was Moaz Casam. He was bragging to everyone that Leff was working for him and he was saving their asses. His words. During this time, those who are familiar with Leff and his focus on short selling and short report writing began to wonder why he suddenly shifted to long reports. That led to initial speculation that he was working directly for Moaz Casam and Anson funds. That speculation has since been confirmed. it led to a fallout. Anson's purchase of Aphria's founder's stock was not disclosed to the market. Shortly after Aphria went public, the stock was trading in the $2 to $3 range, and it's believed that Moaz promised he would be able to help the company raise money with a financing, but he needed to be taken care of before he did. This happened in NIXXI. And I'm sure it happened in Genius. I'm sure it happened in other companies, you know. But I'm not being negative on NIXXI, by the way. That happened last year. So it arranged for him to buy 100,000 shares of founders stock in the company at a price of 10 cents. This transaction took place over 4 months in 2015 in the Anson Investments Master Fund. And ComputerShare was the agent. Suni Puri was heavily involved in this alongside Moaz. There's real money to be made by this crime. So if regulators want to speak with someone else, Suni is your man. Anson involved in fleecing Aphria investors by selling worthless assets. Many of you are already aware of the class action suit against Aphria by Scott & Scott law firm. That's what they do. They set a law firm against the company. We have been told they were sent most of their information by Anson funds. So the short seller gets a law firm to go after the company and the CEO so that the stock becomes worthless. The main thrust of this lawsuit is Aphria overpaid for worthless assets. What isn't known is that Anson Funds was a major holder of one of these assets and made a huge amount of money off the sale. We know from sources with Anson that they participated in early stage financings in at least one of 3 Latin American assets, which were ultimately purchased by Aphria. In June of 18, Aphria announced the closing of a bought deal financing for $258 million. Our sources believe Anson wrote a check for $50 million. This is a move Anson funds would not make without downside cover, which was achieved through selling stock they did not own. This was achieved through selling stock they did not own. They just give the company's own money. That is the definition of naked short selling and is also called front running a placement. Private placements can be shorted before the offering in Canada, but not short form prospectuses or free trading financing, which in this case, it was the latter. And then he says where investigators need to look. Genius Brands and the fraud of the year. Genius Brands was a huge trade for Anson. You don't think that phony was band leader was part of it, paid off? Genius Brands was a huge trade for Anson, and it's rumored that Anson made north of $100 million in Genius Brands. Came out of your pockets while they were destroying the other shorts they're involved in. $100 million in Genius Brands. My fight against my billion-dollar fight against short sellers. What a fraud. Anson's rumored to have made north of 100 million off the back of the huge fraud trade in Genius Brands. But Anson didn't operate alone. Both Andrew Left of Citron Research, alongside Nate Anderson of Hindenburg Research, they're all members of the Wolf Pack, also helped Moaz pull off this heist on investors and the company. Before we get into the pump and the deliberate dump Anson pulled off, we need to understand why and how Anson positioned themselves to make $100 million. You guys, I get upset. I can't get it across to you. And you guys come by something that's running up. Oh, it's going up. Hey, look at this stock. After it's been crashed and it's going up. Hey, look at this one. This is it's for these guys. You're just feeding the beast. So the pump. Augenbaum lawsuit. I can't notice any similarities at all in any of these people. Sheds a lot of light on how Anson managed to position themselves for the trade and also how they burrow into companies, making friends with management that they always knew they were going to betray. That's possible. Be that idiot with the drum major baton got betrayed. It's amazing that no one has written about 3 cents, Genius Brands, in April 2020 to $6 in June of 2020. Anson is very good at pumping stocks higher as well as destroying them. According to the lawsuit, on March 17, 2020, Anson funds purchased senior secured convertible notes issued by Genius Brands and warrants to purchase substantial additional shares of common stock, toxic financing. Anson bought these at 21 cents per share. Now, because of the size of the transaction and the number of shares acquired, Anson became an affiliate of Genius Brands. As an affiliate, Anson was not to sell the stock for 6 months. On June 11, Anson reported that it owned 9.9% of the common stock. That doesn't stop him from selling. Between May and September, we believe Anson sold its position via short sales, pledging their locked up stock as collateral. That is illegal. Yes, but the SEC looks the other way. Yes, we know this is illegal and that banks and brokers wouldn't allow them to do that. But in fact, banks and brokers do allow them to do it. All the brokerages care about is the commission. And Anson pays a lot of bloody commission. So they get away with fraud. There are dozens of documented SEC cases every year where brokerages get fined for this sort of behavior, barely fined. It is believed that Anson sold this stock for over $2 per share and higher. We would be interested in knowing how many shares of Genius Brands Anson funds owned in July of 2020. And we would like to know what Anson's trading was from March to July in all of its funds. Regulators should be asking this information, which they don't. The Augenbaum lawsuit might also help us get this information. Augenbaum sounds like might be a good guy. I don't know. How Moaz Casam and Anson Funds defrauded Genius investors. Anson Funds was the driving force behind the manipulative long-short campaign for entertainment company Genius Brands, GNUS. Hey, we got to get in. We got to get in. This guy's great. Let's sell our finger. Let's sell our whatever the hell we have. We got to get in. This guy's great. He's got a British accent and he dyes his hair blackish brown and he can't be that old. And man, he's fit and he's looking out for us. Guys, the whole thing is a big Broadway production to fleece you. That's all it is. A strategic plan was initiated by Anson funds to make Genius stock price adhere to their long short rule of, quote, elevator up, stairs down. So in other words, you ride it up easy, Lord, and then you slowly walk it down so you can sell a lot of stock, stealing money, with the addition of the safety net of the toxic financing. They would do all of this while giving Genius and regulators the impression they were long the trade. And do you see why I look at patterns? CEOs, somebody walks in, hey, they're good guys, they're going to go long the stock. Bullshit. 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 In early June 2020, out of the blue, social media pundits start calling Genius Brands the next Disney. But this wasn't your typical short squeeze. This was Casam setting up his manipulative long-short strategy by creating unsubstantiated rumors, according to our sources close to Anson funds. Genius, GNUS, turned into the most popular stock added to Robinhood accounts in the first week of June. This move created the liquidity demographic required to see they need you to cover Anson's and other associated short sellers' massive positions, short positions. When Genius stock was peaking at above $8 US, many investors recall that some anonymous pumpers on social media were speculating that Genius Brands cartoons would become more popular than Disney's. They had a new version of Snow White. Snow White was played by a man. On June 5th, at the peak of Genius share price madness, Hindenburg Research, Nate Anderson, entered the picture on cue. Hindenburg is a prominent short seller, and according to a lawsuit filed by Catalyst Capital, and you don't know that these lawsuits aren't all part of it, Hindenburg had a direct working relationship with Casam's Anson funds. Nate Anderson, of course, has denied allegations, but we know from multiple sources he is directly associated with the Anson funds. The pattern is clear to see without source confirmation. The days before the Hindenburg report on Genius Brands was published, significant short positions were taken by Anson funds and its associates. And the guy with the drum major baton, he was getting you to take your money out of, I don't know, finger and other positions to get, so that Anson funds could short. Do you think he was paid off? I do. And to the outside world, there is perfect cover. In his report, see, they put the cover out to so they can show the regulators. In his report entitled, quote, A Bag Holder's Guide to Why We Think Genius Brands Will Be a $1.50 stock within a month, Nate Anderson of Hindenburg Research, they come in to short it so that it guarantees a profit for the Anson fund short position. Nate Anderson argued that the Genius Brands Disney social media posting included a bunch of falsehoods. No shit. They put it out there. Nate Anderson of Hindenburg Funds even suggested that investigators dig deep into a situation that Moaz Casam manufactured in the first place. It is important to note that Nate was paid by Anson Funds for the report, something he did not disclose on this short report, another violation. Guys, no one enforces the rules. There are no systems in place. It is unlikely he was paid directly. It would have been through a third party as a consulting fee. The amount was in excess, we believe, of $300,000. The timing of the release of the report was impeccable. It was also put together complete with an ostensible investigation in a matter of just a few days. That sort of turnaround time is impossible. So it is clear that Nate Anderson was given vital facts of vetted information by an insider. In this case, probably Moaz Casam or one of his close associates, Sonny Puri. Is that really a name? But there are more details of the Hindenburg report which are worth mentioning. The report was premised on the knowledge that retail investors were completely oblivious to the fact that 131 million shares of Genius Brands and share equivalents issued from Genius Brands' recent financing rounds would become available to trade within an estimated 2 weeks. And Anson Funds directly and indirectly participated in these financing or advised Genius Brands in these rounds. On June 5th, at the peak of the Genius share price madness, Hindenburg Research published the report, A Bag Holder's Guide to Why We Think Genius Brands Will Be a $1.50 stock in a month. And then they repeat the same paragraph. Genius Brands has generated losses every quarter for 10 straight years. Despite this, the self-proclaimed street-savvy Anson Funds was Genius's biggest institutional investor and supporter for many years. People need to ask themselves, do you feel lucky? People need to ask themselves why on the 4th of June, one day before the Hindenburg report came out, Andrew Left of Citron Research, a good friend of Moaz's, suddenly put out a negative tweet on Genius Brands. There's a link. I can't read it. Does this not seem strange when he was long the stock, supposedly? After the Hindenburg report came out, Genius Brand stock plummeted, causing Moaz to panic because he likes the stairs down approach as it allows him to disguise his actions much more cleanly. To do this, his team and people linked Anson created the www.disneyguide.com website with the sole purpose. Do you think he hired the actress for Snow White to help this? With the purpose of pumping the Genius stock to stop the slide and make a more manageable descent. Our investigation has uncovered the owner of Disney.com domain is a used car salesman from Minnesota. Let's leave out Flo. I just came in for a cup of coffee, friend. Hey, Flo. I'm going to skip all this about Flow. I'm going to skip all the tweets. You can just take my word for them. I'm going to skip Flow. Although Flow is what is catching them out. On June 15th, Flo did his work. The stock was in a free fall, falling from 793 on the 3rd of June to 397 on the 9th. Then on the 10th, Flo publishes his report and the downtrend stops and the stock goes up to 451, trading 113 million shares. The next day, the stock falls a bit, but still trades 150 million shares. Then on the 12th, it recovers on 95 million shares. The next rate of trading is the 15th, where Josh Flo pushes the report hard. The stock rallies to 452 on 118 million shares. And then Josh Flo knows he's done his work. He pulls the report down. Probably Moaz told him to. Please take into account that the above numbers are impressive, as the average volume for Genius Brands is 30 million shares a day compared to those numbers. The media picks up this, the stock starts following. Note, readers must understand one thing. Reports alone do not send stocks into a nosedive. They need help from the markets, and this is where Anson funds are very strong with their sophisticated trading techniques, stealing, which include wash trading, layering, spoofing, and other forms of manipulation, normally using algorithms that are designed to create weakness in the company's share price by manipulating the bid and the ask. They use multiple brokerages and banks who are all in on the game. Through sheer brute force, they move the stock lower, and with the whole short and distort campaign in full swing, the negative momentum causes panic amongst investors who just wanted to get out of the stock. So one lesson here is when you buy a stock, if you're in it and it starts trading up on heavy value, just get out. It may not happen, but it's very likely this action is going to happen after the stock is up. Any stock. That is when we, all right, so through brute force, they move the stock lower, and negative momentum causes panic. That is when we see the share price fall off the cliff. Hindenburg and Citron are all part of the wolf pack and partners with Anson funds. Their coordinated attack works 9 out of 10 times. Hell, it works 10 out of 10.1 times. But Josh Flo didn't stop there. Seeing the success of his handiwork, all right, he publishes something else. I don't want to go through all that. Disney set to buy a stake in POW Entertainment. All right, so Genius on the 6th traded 170 million shares. And on the 7th, it traded 135 million shares. This is a huge increase in volume, and hundreds of millions of dollars have been siphoned from investors with this fraud. My billion-dollar fight against the shorts. That guy was a liar from the moment he stepped into your chat rooms. Or a complete fool. Which one's worse? Would you rather deal with a liar or a complete fool who thinks he's smart? All right, I'll leave that alone. There's Flo. There's Josh Flo. There's more. This is the campaign. This is the campaign. This is the campaign. So Josh Flo is the weak link in this particular investigation. So here, a Moaz Casam voice recording. This is from Anson funds. Quote, Moaz Casam, quote, this is from a voice recording. A lot of times, if I'm working with Ben Axler, Spruce Point Capital, or doing this kind of stuff, then we can create our own catalyst, right? Because we're putting out a report. So I know when stuff's gonna go down and I'll buy puts. It's very easy to know. A lot of people know when something's coming, so they'll buy puts. And you know he makes 50 puts per day, so I'll make 2,000 trades today, and that hurts the stock the next day when the report comes. You guys, there are no systems in place. These are a bunch of crooks. So the article goes on, wow, this does not look good at all. I think we can let the regulators deal with this, but they don't. How many companies have been the victims of Moaz Casam's quote-unquote catalysts? Reconnaissance Energy Africa. So it's Anson funds on Reconnaissance Energy Africa. It explains how he creates catalysts. Quote, this is Moaz. I loved what he did today. He did on TOS, by the way. That was awesome. And then Moaz says, where do you think all that came from? It's all us. We don't publish anymore, unquote. At the heart of it, and I've said this about these guys, Moaz is a coward. Anson no longer puts out its own short reports for fear of legal repercussions. Now, the Anson team just does the research and feeds it to various stooges out there, such as Ben Axler, Viceroy, and others who carry all of the risk. These reports always have an element of truth, but they are also filled with lies. Anson regularly engages in wire fraud with other short sellers. Here's some more sound bites. Quote, because we're short a lot of these names, I'll still buy into them, right? If I'm already short, I'll buy it, the private placement, to sell to get the warrant. So they buy the private placement, they sell the shares down, it doesn't matter, they get the warrant. I do a debt to equity with warrants. Every company comes through here. We meet every single marijuana, every single crypto comes through our office because we're writing the biggest. So he buys into private placements where he's short the stock. Don't the regulators have an issue with this? This is Anson funds. because we're short a lot of these names. Let's just change it. Because we're short finger motion, I'll still buy into finger motion, right? If I'm already short, I'll buy the private placement to get the warrant. I manipulated that quote. Here's how the shakedown works. You announce a private placement or let it be known that you're interested in raising funds. Anson gets wind of this and starts selling your stock hard. They then have you over a barrel as they know you will need funds, and at the lower price, they renegotiate and take you to the cleaners. This has happened too many times to count, but regulators who don't give a flying fig should take a look at Harvest Health. Let's skip that. Moaz, soundbite 4, quote, we're making our money on these convertibles to longs, like converts on the marijuana, and I'm short a ton of marijuana and buying a bunch of these broker deals, unquote. That's Moaz Casam, soundbite 5 from Mintz and Funds, quote, so you want to go to the places that are lending out. That's what we do, but it's very hard for retail. We're putting up big numbers and paying massive borrow rates. We're as important to a prime broker as a $10 billion fund because we're paying 50, 70, 100% for some of these names, and no one else pays nothing. Sorry, my eyesight. And no one pays anything. His English is good. He's got that going for him. What Moaz is saying here is that the banks are in on the fraud. What Moaz is saying here is that the banks are in on the fraud and market manipulation because they get paid big fees. Regulators should be looking at RBC, CIBC, TD Bank, National, and others. Moaz Casam, soundbite 6, quote, and don't mention to Sunni that we give stuff to Andrew Left or Ben Axler, unquote. Moaz lets others do the dirty work for him. Lynn Partners, the Kramers, Ari Rubenstein. Moaz lets others do the dirty work for him. He talks a big game, but when confronted, he's a pussy. He tucks his tail in and has been known to beg and to plead, blaming everyone from his colleagues to his father-in-law. Final quote. We have the luxuries, and I can at least use these 9 different prime brokers. 9. Do you see how I say that the lawyers get in there, take that document? You tell me, well, I don't know, pick the company. Finger Motion paid back that deal. That's right. But the deal already established this sluice of short selling at 9 different broker dealers, prime brokers, 9 different prime brokers. So you buy it back. The lawyer doesn't go say, hey, that deal's gone. They just continue sluicing. We have the luxuries. I can at least use these 9 different prime brokers, and I'm all over these retail guys in the United States. All these guys who buy shit. So we have all these prime brokers in Florida. Oh, there's one more soundbite. Quote, you know, I can bring in Sunni to talk about Shah. We think it's overvalued. But again, like, could it affect the stock price? That's the objective. And Andrew doesn't work schemes anymore. And you guys think I've lost my mind when I point out, and then one guy says, thanks for bashing. I'm not trying to bash. I'm just telling you, like my brother once told me, if you want to get violated sexually against your will, you got to bend over first. All right, that was a long article. Is that really your name, damn it, Sean? When I grew up, that was the first name of my cousins. My uncle David, who they say I look like, I don't know, but he would my cousins Gayla, Kathy, and Skinny. But the middle child was Gayla. He would say, damn it, Gayla, so much, everyone just started calling her, damn it, Gayla. Yeah. I find this depressing. I find this really depressing. Copper's very interesting. I think copper's obviously going up, but I think it's vulnerable too when we have a crash worldwide, which I think up, then down. I think elevator up, escalator down, not stairs. Actually, I think it'll be more like a roller coaster. But yeah, I like copper. I'll look into that. SRAFF. SRAFF. Damn it, Sean. This doesn't look like a anyway. Do I see an imminent? No, I don't see an imminent market crash. I think line of all trades has been correct on the SPY so far, and there's talk that the S&P didn't rally through again. But I think there's my opinion, of course, it's only my opinion. I think there's a lot of liquidity. There's a lot of funds set up on automatic reinvestment. There's a lot of retirement accounts, automatic reinvestment. And then I still think money from overseas is going to come here, particularly in the Middle East. It looks like we're going to go to war in the Middle East for that fat slob Benjamin Benzion Mayakovsky. Benzion Mayakovsky, born in Warsaw under Russian control. His father was a rabbi, toured Europe and the United States, making speeches supporting Zionism. Benzion Milakowski, Polish. Oh, sorry. That's the wrong guy. My apologies to Benjamin Netanyahu. There is a real guy. That was he. So Benjamin Netanyahu, Israeli politician. His name is Benny Gantz. Benny Gantz. Oh. Man, they manipulate this. Born to secular Jewish parents, Netanyahu was raised in West Jerusalem and in the United States. He returned to Israel in 1967. This is all crap. He worked for the Boston Consulting Group. He graduated MIT. What's his real name? Oh, he was born. It's all lies. Anyway, he changed his name. Yeah, it is. It says here, do you know it's Milakowski? Every Israeli prime minister has changed their name to sound more, let's say, Middle Eastern. Oh, Lordy. Anyway, it's not that interesting. What the hell is going on with FNGR? According to him, it was supposed to squeeze this week. Well, I don't know anybody that can call when a stock squeezes. Let me just look something up. My eyesight is, I hope it doesn't get worse sometimes. Look, it's impossible to know when a stock is going to squeeze, and you're up against sinister forces. The Anson funds are the largest institutional shareholder, supposedly, of FingerMotion. I think the things that can make FingerMotion go up rapidly would be further clarification on their C2 contract, a alliance with the car manufacturer, the truck manufacturer, SAIC, and more information on data/insurance contracts. Those things could change the story overnight. I think FingerMotion's earnings, which will come out on the 15th, around then, for the fourth quarter could be positive. I don't think it'll be big, plus 1-3 cents a share, but they could be negative. But the key is going to be, what does it say in the earnings? as guidance for the next year. And that finally could turn things around for finger motion if, in fact, finger motion is giving guidance of positive earnings. There could be a research report out of Roth Capital that could help. But I think Finger suffers in terms of having a short, not last week. I think Finger suffers from a couple of things. One, it's been going on for so long, so that makes me think it might be under control. There's not a surprise there. You need a surprise, and it can come. A big buyer, big contract that changes the story overnight, but that has to happen. A surprise has to happen. And then secondly, I don't think finger motion is an easy story to tell. So as soon as they get to profitable earnings, as soon as they have a focus that can be easily expressed in a 45-second telephone pitch, I think the stock can go up. And once it's up, the pressure's on the naked or the undelivered positions all over Wall Street, and you could see something happen. But anyway, I think there's a couple of steps that need to happen first. Ham has a call at 12:30. Well, I'll make sure I get off I'll get off here. NIXX seems to be ramping up. What do you think? I forgot, Benjamin, I forgot to take a picture of it. But NIXX had news yesterday, and I thought it was very good news. But, of course, the shorts sell it off. There is a complexity in the news in that it goes through a subsidiary, and I will admit that I didn't study it closely, but I looked up the SEC filings, and it's complicated. In other words, how much did Nixie have to give up to acquire those revenues? But let me just read the news story to you. Yeah, they get it down 31 cents, Benjamin, even though the news, I think, was about all you could have hoped for. So 22 days ago, Nixie announced that I guess they're building a portfolio of AI companies. It's too bad that Logic's not doing this. He just sold Logic to one company. It's a shame. Logic was supposed to have 7 companies going in, and he ended up doubling he doubled the amount of shares once, and then he doubled it a second time, and just sold it to one company. Who has 10 followers on their LinkedIn page. It's a disaster. So anyway, he's giving his attention to Nixie, and Nixie announced that its subsidiary, Atlantic Energy Solutions, which is going to become Cogno Group, acquired Wizco Group, which is an AI-powered interview coaching software company with a product called Ava. Founded in 2020, Wizco is a chocolate company serving, I really think that's the name of the chocolate company on Monty Python's skit. Constable, the Wizco chocolate company. Anyway, Wizco, cutting edge AI, And they use human knowledge too. And of course, they help individuals. Look, I'm sorry to be sarcastic. It's all good for the company. It's just when you read these PRs, I think a PR could be written in one paragraph without all the extra words that no one knows how to use them or what they mean when they put them together. Designed to help job seekers. All right. So anyway, then you come to yesterday's news. NIXX's revenues. Oh gosh, this is the wrong one. Sorry. That was their $10 million share buyback. All right. So yesterday's news. NIXX's revenues commence. Let's skip the bullet points. NIXX announced the successful launch of its AI-based telecom services via Neuralink AI subsidiary. Neuralink AI is scaling its operations. When I think of scaling, I think of taking the scales off of fish. Neuralink is going to increase. Neuralink is enlarging its operations to meet its customers' demands and is expected to generate more than $250,000 in initial revenues in March. 250,000. Furthermore, Neuralink is projected to generate approximately $2 million in April when they exit the month of April. So it's a little bit inflated for April, but as they exit April, they should be on a $2 million a month run rate. Early in the ramp-up phase, this initial transaction represents meaningful progress toward the company's goal of achieving $25 million monthly revenue run rate. I don't know, it goes on with a bunch of crap. But anyway, so it was good news, Benjamin. I don't know that in and of itself it's enough to get the stock dramatically higher all by itself, but I think there'll be more news coming on NIXX. So I think this is a good foundation piece that talks about how the earnings are going to, the revenues are going to be $2 million a month in its subsidiary. And that, anyway, that all gets, you don't know exactly the breakdown. I'm sure you could study it and figure it out. I didn't. But it's good news. It's good news. And I think NIXX looks strong on the charts. I think there's more news expected. And I think you're going to see a double in the price fairly soon, but that's a projection, not a promise. GBUX, you put it up for sale, obviously not on the bid. Oh, you did it at the ask price and got a partial fill. Well, that's normal. I think all that tells you, Diggy, is that there wasn't buying on that day. The way the markets are now, it's all computerized. So unless you, oh, sorry, no, for sale. Yeah, you put it up for sale. So unless you put it in at the bid, you're not guaranteed an execution. If you put it in at the bid, you're not necessarily guaranteed an execution there either. If there were 100 shares bid for whatever price, and you put in 700, you might only, they're only obligated to give you 100. But typically what I notice right now is they fill you above the bid and below the ask, because it's all fake. It's all manipulated. And I'm sick of it. Let me see what's going on. Let me go to the top before I lose them. Hey, Red Pepper, Gary, Silver Minecart, damn it, Della, Carnegie's Paper, Gary, Maddo, Gary, Odd Time, Ronnie, Buongiorno, hey, Donna. Oh, Donna. From Scotland? Ach, no. Ach, no. From Scotland? A wee little post. Oh, Gronk. I miss Gronk. I might see Gronk. No picture of Gronk. I met a nice little dog today, tiny one. He wasn't that big, sort of Cocker Spaniel. His master didn't want me to spend a lot of time on it. He's a nice dog. I met a really nice girl dog last night that was behaving for her owner. The dog would sit for her owner and wait, and then her owner let the dog come see me, and the dog was young, and of course the owner's trying to teach the girl not to jump up, but I don't care. That was nice. By the way, damn it, Sean, right now I like your story, and I'll look it up, but the process, if you want to make money in the miners, would be to buy the bigger names first, maybe the ETFs, as long as there's not a financial crisis, and then go into the juniors who are producing, and then get into stories that you know who aren't producing yet. But that's if you're trading. I mean, if you know a story and you're confident, there's nothing like getting in at a good price and waiting. Honesty is. Feb flies in the marketplace poison the well, Nietzsche said. The flies in the marketplace poison the well, Nietzsche said. Silver dimes, silver threads, and golden needles. All right, now let's get back to the opening article on gold. I showed you the website for von Greiritz, Egon von Greiritz. I don't know if I'm saying his name, Greiritz. That's the name of his website, but you can go to Gold Switzerland as well. His service is for the ultra wealthy, but on his website, he shares research. He also, I have found to be quite honorable. I followed him for years. And he does have one, I think, it might be two people he refers you to in Switzerland if you have smaller amounts of money than $1 million. Okay, so he titles his article Bonfire of the Paper Asset Vanities and the Rebirth of Gold, written on Thursday, published on Thursday. Some time ago, I wrote an article which I considered the most important article I've penned. It is a story about three investors, two real and one fictional, the wise, the unlucky, and the greedy. We can go back and see that, but let me finish this one. Their destinies are very different. The article starts with Brutus's speech in Julius Caesar, so are they all honorable men. And we must take the current when it serves or lose our ventures. Well, we have finally arrived. So what do I mean by that? Simply, we are now at the point when investors must take the current or lose it all. And I've been saying that. I think we're, what I've been predicting is we had to come around to the new year. So all the lemmings that manage your money can start providing cover from moving away from NVIDIA and the rest of the overcrowded trades. And it's going to be gold. It doesn't help that it looks like we're going into World War III. It's really frightening. If we attack Iran, the illusions of American worldwide power are going to be crushed, I think. But we'll see. Maybe we have miracle weapons. But man, do we have to keep killing people? All right, so we are now at the point when investors must take the current or lose it all. Forecasting time and price is a mug's game, going back to Jake Neville. Forecasting time and price is a mug's game, but we all do it sometimes. This is a lesson I've learned after about 65 years of market experience. Instead of time and price, it's much more important to understand trends and risks. This is what led me, Egon von Greyerz, in 2002 at $300 to purchase larger amounts of physical gold for ourselves and investors. Gold had corrected over 20 years and a credit explosion was in the making. At that time, 20 years ago, I guess, a little over 20 years ago, I told major clients to put more than 50% of their liquid assets in gold. I agree with that, but I would do silver now. They haven't regretted it. And today, for the first time in 25 years, mainstream media, another thing I predicted, and investors are starting to talk about gold. I'm not trying to take credit. I'm just saying that on this particular trend, we're on it. So it's taken a quarter of a century and a 10-fold increase in the price of the gold for the public to wake up. We only buy when things are dear. We'd never buy them, and it's just annoying. For some time, $3,000 an ounce of gold has been an obvious magnet for gold. As I've written many times, However, 3,000 is certainly not a target. It's not even a price where gold will consolidate. It's just a round figure. And gold will not stop at $3,000 for long. Many investors have not purchased gold recently as they've been waiting for a correction. The same thing with silver. But we have told investors that gold is unlikely to pause at this level. Instead, once gold properly passes $3,000, we're likely to see an acceleration to the upside. Where I was wrong on the trend was in stock markets. I definitely thought that 2008 would be the start of a secular bear market. But massive money printing created miracles and fueled markets for another 17 years. Has it been that long? 17 years. Wow. We were out of stock since the beginning of this century, which has been beneficial since gold has outperformed stocks, even with dividends reinvested. So instead of a market collapse in 2008, massive money printing and credit expansion have created the biggest stock market bubble in history. And it's a dangerous call, but I think it's still going to go higher. I'm not sure I would trade that call, but today, the United States stock to GDP is over 200%. I'm skipping some stuff. Why have we finally arrived? Gold and silver are about to accelerate. So if we look at the Dow gold ratio, back in the year 2000, the ratio was 45. Now it's 14. The ratio was just broken a 12-month trend line and is about to accelerate downward. This means the Dow Jones Index has fallen 69% against gold in the last 25 years. Do you see that? The Dow is hitting all-time highs recently, but it's fallen 70% against gold in 25 years. If the Dow gold ratio reaches the long-term support at 0.5, it would mean a 97% fall from here. This could mean gold at $20,000 and the Dow at $10,000. I think the Dow could go lower. But first, a little cheat. Since the 1990s, I have privately talked about the inevitability of a collapse of the current monetary system, just like every monetary system in history has collapsed without exception. The reason is the growth of credit. And the growth of credit has been exponential. From 1971 projected through 2030, the growth of global debt is up 750 times. From 71 to 21, it was up 75 times. Global debt grew 75x from 1971 to 2021. Today, global debt is around $360 trillion. But if we add unfunded liabilities and derivatives, which are a form of debt, The total debt and liabilities are around 3 quadrillion. So we are likely to see a debt collapse with bonds crashing, banks borrowing or blocking clients' funds, or governments forcing bank accounts to buy 100-year bonds, zero coupon bonds. And obviously the dollar will fall precipitously. At best, we will see a restructuring, and at worst, a collapse of the banking system. Preserve your wealth with gold. I think silver is where you should be. Investors in cash or securities will experience the biggest wealth destruction in history. So to protect against these risks, don't hold stocks except for resource stocks. Number one, don't hold stocks except for resource stocks. Remember that stocks held within the financial system are vulnerable to the financial system's failure. Number two, don't touch any bonds with a barge pole, including government bonds. Governments can never pay the capital or interest with regular money, only with massively depreciated fiat money. Now, we could get one more rally in the bond market too, as particularly the United States government spends its credibility one more time. That's what we're doing with our military. We're going to war first before we have to face the fact we'll never be Australia. We'll probably never be the UK, but we're probably going to be one of two, maybe one of three, maybe one of 4 or 5 countries in the world who have global power. We're not going to be the country that Wolfowitz and Cheney and Newland envisioned. All right, number 3, don't hold bigger amounts of dollars, euros, yen, or currency in a bank. Cash deposits in a bank are at risk. Currencies will fall. The Swiss franc might be better early, but not forever. Only hold personal property and not investment property. So own the home you live in. Get out of debt if you can. And get out of Dodge if you can't. We will likely see capital controls in many countries, including the United States and the European Union. The main restriction will be that you can't get your money out of Barclays Bank. The main restriction will be that you can't transfer funds out to buy property or to live abroad or with abroad. Buy physical gold and silver. Hold your gold and silver in the safest jurisdictions and countries where there is a rule of law. Switzerland and Singapore are the most obvious. Yes, except Switzerland has gone woke, but I agree, Switzerland is the most obvious. Singapore is bloody close to China, and China will go to war before it loses its standing as well, probably. But yeah, Switzerland and Singapore, maybe Minnesota. Andy Schlechtman at Miles Franklin, I think, has something to say about that. Since we first invested heavily in gold in 2002 at $300 for ourselves and investors, we have developed a state-of-the-art system we have high net worth clients in 90 countries. You need 5 million smackers. It used to be less, but they have a vault, nuclear bomb, and gas attack proof. Do not wait to buy your insurance in the form of gold and silver. Buy it now. Insurance can never be bought after the event. In future articles, I will compare gold to Bitcoin. I will talk about why gold is undervalued. I'm going to talk about why you shouldn't store gold in Dubai or fall in love with a girl you meet in Dubai. I'll discuss silver. I'll discuss Swiss bank accounts. I'll discuss Donald Trump and war. And I'll discuss European leaders who hope the war will save them, and much, much more. But wait. Finally, remember, and this is important, remember that family and friends are what life is about. Help others, especially in the difficult times ahead. Since the early 2000s, I've been standing on a soapbox to urge investors to buy physical gold for wealth preservation. So have I. So have I. Few have listened, as gold today is a mere 0.5% of global financial assets. So anyone waiting to buy gold cheaper will either be left behind or will buy it at a much higher price. That's it. That's it for that article. And see, I can't read that out, can I? Maybe I can. It's not meant to be Catholic. It is Catholic, but it's not. The message isn't. Today is Saturday, the third week of Lent. The power of humble prayer, and that's all we can do now is pray. Pray for peace. Pray for that Trump doesn't start World War III. Pray that sane minds control rule in the Kremlin. Pray that Bibi Netanyahu walks off the long pier. I'm not threatening him. I'm just saying I just politically walks off a long pier. In the vast interior space within St. Patrick's Cathedral in New York City, during the quiet hours when no mass or other event is taking place, there are always people scattered about on their knees in prayer or sitting alone reflectively in silence. I see this almost daily whenever I pass through from the Fifth Avenue entrance. The people in the remotest corners sometimes draw my attention, and I do wonder at times whether one or the other is praying exactly the words we hear today. O God, be merciful to me, a sinner. The prayer of the publican has shown a marvelous staying power. Souls in spiritual need have repeated it for centuries, and always this prayer has been heard by God. He cannot resist the soul that humbles itself while aware of its sin. A prayer of humble sorrow is the preliminary disposition to any serious confession. Sorry, that's Catholic. This gospel passage has certainly been a catalyst for a return to God by countless souls in history after years of spiritual exile from the sacraments. That's also Catholic, my apologies. The desert monks incorporated the words of the publican into what became known as the Jesus prayer. Lord Jesus Christ, Son of God, have mercy on me, a sinner. Again, that's Christian, Catholic. I apologize to other faiths. The silent repetition of these words can be an excellent practice in fostering a deeper contemplative spirit in our personal lives. Almighty Father, we turn to you in this time of repentance and ask grace for ourselves and countless others to seek the sacrament of penance this Lent with further love. I went to confess my sins, I don't know, a few months ago, after years. The priest was so kind to me, so kind. He only made me say, I think I had to say 4 Hail Marys, might have been 5, one for each decade that I had been gone. But he also told me, pray for world peace, which is, I guess, why I keep bringing it up. But hey, Big JR, let me see. There was something else I wanted to talk to you guys about. I was just going through, I was trying to find Anson funds today. Here's the finger motion note with Lynn Partners, $4,800,000. This was August of 22. So 6 months from the issuance date, Finger would have to make a payment of $266,666.7 every month. If not, the maker could use repayment shares. It's just a nightmare. And then you use the shares, the repayment shares are calculated at A minus B times C, where dividing the principal amount being paid by 90% of the average of 5 lowest daily volume weighted average during the 20 trading days prior to the payment date. So they just short the stock. Guys, there is no way to win. And this is illegal, by the way, this shorting. Following the date that is 60 days following the registration statement, they can repay it all plus a premium of 5%. That's what they did. That's the finger motion note. This is a letter that I, on behalf of a client, I contacted Von Greiritz. They got right back to me on the services, but unfortunately, the money never arrived. This is interesting. I went to conference, and here's a map of Africa. And at the border of Namibia and Botswana, Recon Africa. I wonder if that's that same company I just mentioned. Was it? I pity the fool. I pity the fool. I pity the fool. I wonder if that was the same company we just discussed. that Anson funds shorted. Of course, it's a long article, hard to find. Might be. It sounds very familiar. Well, anyway, yeah, Reconnaissance Energy Africa. That's this company, poor bastards. They got screwed by the Anson funds. But look at this asset. Let me read this asset to you. When are we going to clean up our markets so that a few men out of Toronto aren't just stealing the market cap? All right, so they licensed the entire Kavango Basin in Nambia and Botswana, 8.5 million acres. 5.2 billion barrels of oil in place, 2 trillion cubic feet of gas on risk. If they recover 18% of that, it's 1 billion barrels of oil and gas. And they got, I'm not recommending the stock. Look at the stock price. They got destroyed by this Anson funds. What a coincidence. And look at the whole team. How can that whole team be bad? There's one woman. What do you think that she's in IR or human resources? Let's find out. Honorable Diana McQueen. She's corporate communication and stakeholder relations. Oh, there's another one. Claire Priest. She's on the board. No, she's the technical team. Good for her. But otherwise, it's all men, and it looks like white men. And I'm trying to see who I met. I think I met this guy, Craig Stentke, the CEO. I think that's who I met. No, he's not the CEO, he's the founder. So I probably met Scott Evans, the CEO. But anyway, Nambia is formerly a German colony. It's been independent since the 90s. They have a great license term. Botswana is Africa's longest standing democracy, fourth most attractive investment destination, Africa. And these guys out of Toronto are stealing. Here's the target. There's the target. Anyway, my point to bring this up is there is oil there. It's not going to. Here's the basin. And these shorts destroy it. All right, let's skip that. They drilled a bunch of wells. But that's a huge play. That'd be interesting. Maybe there'll be a short squeeze in that. Isn't that funny? It's totally coincidence. All right, that's a private deal. Oh, this is about MMTLP. You guys know all about that, so I don't need to tell you about MMTLP. I picked up this presentation on Kaminsky Enterprises out of Texas, and they have a lot of the ring energy wells, which I had a chance to buy. Not me personally, but I had to market it. I flew to London. I didn't have any luck. Bitter oil can go lower. And it was when oil was effectively zero. Anyway, I'm not going to waste your time with that. This is a letter from Wes Christian, who Ham taught, or at least Ham introduced to short selling, something like that. This is from dated June 28, 2023, Christian Avatar, and it's written to the editor. I write in response to Brandon Kokudin's article, The Looney Conspiracy Theory Threatening Wall Street. This is from Wes Christian. For the past 20 years, my team of lawyers, consultants, experts, and I have zealously and successfully represented clients who have been victimized by naked short selling schemes perpetuated by unscrupulous broker-dealers. In the course of my representation, I have also brought to the attention of regulators and legislators the profound adverse impact naked short selling has had on the capital markets of our country, the growth and development of small and mid-cap companies, and on the pension profit sharing and savings accounts of working class citizens. Mr. Koken's cynical accusation that I have made, quote, grandiose promises, unquote, but, quote, failed to deliver results, unquote, is belied by the numerous motions to dismiss that have been denied by state and federal courts across the countries, and the tens of millions of dollars in confidential settlements against major investment banks that my team and I have accomplished on behalf of our clients. In light of the records my office sent Mr. Kokudin following the interview, which included 1, copies of the orders supporting the motions to dismiss that have been denied by state and federal courts, and 2, a summary of the stock fraud cases which have resulted in settlements, I expected that Forbes would have acknowledged the pervasiveness of naked short selling and restrained its writers' personal attacks on me. They're all in on it. Not Wes, I'm talking about Forbes. While disagreements with adversaries is part of every litigation, when I agreed to be interviewed, I did not expect to be, quote unquote, sandbagged by a writer who assured me he would write an article which was, quote unquote, fair and accurate. Sadly, Mr. Kokudin's article is a shameless example of irresponsible journalism by a writer who has ignored publicly available documents, data, and enforcement actions that categorically refute the premise of his article that naked short selling does not exist. And then he goes through The present-day pervasiveness of naked short selling is clearly and unambiguously demonstrated by the recent enforcement actions imposed by FINRA and the SEC for persistent large-scale violations of Reg Show. Of course, they don't charge anybody very much. Skipping a little bit, by claiming that it's doubtful, quote, and that, quote, naked short selling exists anymore, Mr. Kokadin has clearly demonstrated, one, he neither thoroughly researched nor fully understands the topic of naked short selling, or two, he is a shill for those brokerage firms who have made millions by manipulating companies through naked short selling, and three, he is a writer who cannot be trusted to be fair, objective, thorough, and even-handed. Finally, the evidence of present-day naked short selling is well established and readily available to anyone who wants to learn the truth about this form of market manipulation. Apparently, however, Forbes does not care about publishing well-researched and truthful articles or holding its writers to the highest standards of investigative journalism. Instead, Forbes is prepared to tolerate flawed and misleading writing, personal invectives, and ad hominem attacks by their writers as long as their articles generate clicks and grab the attention of the public. The demonstratively false and misleading article that Mr. Kokokdin wrote and Forbes published is regrettable. Whether Forbes will continue to hold its writers to substandard levels of journalism that misleads its readers, only time will tell. However, it will not deter me from continuing to zealously represent my clients against unscrupulous broker-dealers who have engaged in naked short-selling schemes. Sincerely, James W. Christian. Pretty good, huh? Pretty good from Wes. Then he wrote another letter. Now, Robert Shapiro wrote a letter to the editor. Robert Shapiro wrote a letter to the editor of Forbes. It might be a email to the editor. Branded Coden's sadly uninformed and ill-tempered piece on stock manipulation makes two core claims. First, naked short selling does not exist. And second, Wes Christian is a cynical huckster and conspiracy theorist. As to the second claim, I have known and worked with Mr. Christian for many years and have always found him sincere, honest, fiercely intelligent, and honorable, with a distinguished career. The writer provides, I'm skipping a bunch of sentences. The writer provides virtually no data to support his claims. I confine myself to his remarkable assertion that naked short selling does not exist. The most basic public data on naked short sale, the Reg Show threshold lists, wholly refute this claim. Reg Show threshold stocks are those with persistent fails to deliver, equal to at least 10,000 shares or 0.5% of a company's outstanding shares. Since long sales are settled electronically, virtually all undelivered shares represent short sales in which the short seller sold the shares and failed to deliver them, i.e. naked shorts. A short sales that involved fails that are brief are not included. A stock's naked shorts must persist for 5 consecutive days at the required levels to be placed on the reg show list. In June of 23, for example, 43 companies on the NASDAQ or NSE were on the reg show list. Naked shorts are dangerous because an unscrupulous player who does not borrow and deliver shares that he sold short can drive down a stock's price with little cost. The danger to companies increases if the naked shorts are maintained for considerable periods. I reviewed the reg show list for the past 7 weeks. This is in the middle of 23. And those data show that at least 11 securities were listed for extended periods, pointing to substantial, persistent, naked short selling. Then he lists a few stocks, and I'm going to skip that. One of them's MULN, by the way. A threshold stock that remains on the threshold list for 13 consecutive days is subject to mandatory buy-in. So no stock should be on the list for more than 2 or 3 weeks. Yet, the rule is not enforced. Or a person delivered shares, sold the same stock short again, and then failed again to deliver. FINRA, in the last 3 years, FINRA has fined UBS for carrying 73,000 naked short sales. That's not shares. That's 73,000 separate criminal actions of entering naked short sales to UBS. Wedbush Securities for violating Reg Show 2,000 times. Cantor Fitzgerald for executing 5,000 naked. These are all crimes. Goldman Sachs for mislabeling 8 million shares as long in order to evade Reg Show scrutiny. JP Morgan for more than 100,000 violation of the Reg Show buy-in requirements. Jamie Dimon. The SEC fined Morgan Stanley for using derivatives to evade Reg Show. Derivatives are in all the at-the-money contracts, by the way. I'll show that to you on another call. BNP Paribas, IMC Chicago, and Tradition were also fined for extensive and persistent Reg Show violations. Whether a stock subject to persistent, substantial naked short selling is a provable target of manipulation is a matter for courts to determine. Well, I disagree. Go in and take them out in handcuffs. It is difficult to prove because critical evidence usually lies with the liars in the trading records of broker-dealer defendants with large resources with which to fight. Nevertheless, numerous plaintiffs have survived the broker's motions to dismiss by presenting sufficient facts to establish a plausible claim for relief, and following discovery, ultimately have received substantial settlements when the brokers are confronted with evidence of manipulation. The public records show that this has happened with Endovasc, Pet Quarters, Eagle Tech, Hyperdynamics. Hyperdynamics was a company, I was very close to the CEO. Hyperdynamics, if it's the same one, had the exclusive rights to the offshore drilling, Ghana, and Exxon hit a big discovery there. And for them to be destroyed, it's just unfair. Sedona, I think, was something that Ham was involved in. Taser, Razor, and First Empire cases, as well as the Overstock case. Since the record of naked short selling as a means for manipulation is well established, I expected that Forbes would insist on some evidence for its writers' facile denial of naked short selling, especially since such extensive information is publicly available. I also hope that Forbes would have restrained its writers' personal attacks on those who disagree with them. Robert J. Shapiro, Senior Fellow, Georgetown University Center for Business and Public Policy, Chairman of Sonacom LLC, and former Undersecretary of Commerce for Economic Affairs. It only takes a few whistleblowers with hard evidence. I know, Randy, one hopes. Stopping short selling. I agree. If Trump wants to make America great again, there's no better place to start than our beleaguered over-the-counter and NASDAQ markets. I include NASDAQ because it used to be the gold standard of over-the-counter. Under Adina Friedman, it's a joke. NASDAQ is a joke, living on its past reputation under Adina Friedman. Would you get in a plane now with DEI pilots? I don't know why you trust your money to a DEI exchange like NASDAQ. Thank you, Randy Albert, Mr. Uncle Albert. Is that Gronk? Yeah, here's Gronk. I wish I could say hi to Gronk. I wish I could say hi to Gronk. He'd probably ignore me. He'd probably ignore me. What did JR say? What did JR? If you named all the tickers Anson shorted. Well, one thing about it is Anson might himself be related to the bigger funds. Who knows? But I think it's at least plausible that Anson and Anson's attorneys train guys like Lynn Partners and Kramer, because they need the bird dogs out there going to get the lamb for slaughter. The lamb for slaughter. I've got to go to the dentist. I feel like I have a cavity in my front tooth. All right. I found the report on the stocks some of you guys invested in. I can't wait to have a call to talk to you about it again. This is the Geneva Roth Remark Holdings trade. Look at this. A convertible promissory note with this is for GTII from the Kramers. Aggregate principal amount of $74,800 which includes an original issue discount of $6,800, as well as the repayment of $3,000 in expenses. So you have to take $74,800 minus $3,000, so you're down to $71,800, and then you take $6,800, so you're down to $70,000. You're down to, they gave them $64,000, but they have to pay back on the $74,800. And this is what started it on its decline. How do they afford offices making $6,000 per deal? They don't. They don't. They short the crap out of the stocks. I read you that one. Gold will rise by multiples. I'm not going to read it again. I think you've had your fill of gold. Here's Hal Mintz. Let me see if I can find this. A long-running fraudulent scheme, abusive naked short selling, order mismarking, and other violative trading. Yeah, this is repeatedly circumventing trading rules in at least 10 issuers on behalf of 2 private funds managed by the defendants, who are Hal D. Mintz and Sabby Management. The defendants' fraudulent schemes involved at least 2 forms of abusive trading. First, knowingly, recklessly mismarked sales of securities as long, even though they did not qualify as long sales, because the funds didn't own or were not deemed to own the securities being sold, and they did not have a net long position in the securities being sold. Defendants should have marked those sales as short. Failing to mark sales correctly is a violation of applicable order marking rules. Because defendants' sales were actually short sales that they tried to disguise as long sales, defendants had not located, which means borrowed or arranged to borrow, or had reasonable grounds to believe that the shares could be borrowed. They had not located the shares they sold. The sales further failed to comply with the low rate requirements of Regulation show. Second, the defendants engaged in abusive trading in which they marked and sold shares short when they knew or were reckless in not knowing that they had not borrowed or located the shares. Defendants used their violative sales to deflate artificially the price at which defendants were able to convert their securities into stock. They miss out on what's really going on. The lawyers just focus on the note. This is just small potatoes compared to the shorting that happens in the markets unrelated to this note. Well, the note is the backstop, the false backstop. Defendants made false statements. Defendants in some instances would acquire the required stock after their short sales. Defendants knew or were reckless in not knowing that these practices failed to comply with applicable trading rules, which require, with very narrow exceptions, which are not applicable here, that a short seller locate the stock prior to the sale. Prior to the sale. Somewhere it says that locate has to be in writing, but I can't find it. Anyway, Ah, there it is. I just found it. The source of the locate must be documented. This is the SEC against Hal Metz. Of course, nothing happens, or it takes forever. They did demand a jury trial. All right, I'm not going to read more of that. There's Bill Wong. Scottsdale committed thousands of violations of permanent FINRA order to cease and desist. But what happens? The Securities and Exchange Act created a complex statutory regime of, quote, cooperative self-regulation of the over-the-counter markets. That's got to just be changed. FINRA is a Delaware not-for-profit corporation. FINRA's membership, 3,400 brokerage firms, 150,000 branch office, 610,000 registered reps. This is Alpine stating that FINRA shouldn't exist. This is the trade station case. I'm not going to go over that. I think I might stop going over anything else with you. Oh, this is John Berta. This is the SEC going against John Berta and George Palikaris. They did an ATM offering 16 million shares of Torchlight. The SEC always goes after the CEOs. They don't go after the criminals. Does it ever stop? Here's John Kennedy, a guy that I like. SEC's consolidated audit trail. A disaster. Customers' full names, birth years, addresses, which stocks they bought, which stocks they sold, and when the transactions occurred. Do you know there was a woman who threatened the Fannie Mae on Facebook as she was driving her car to this will piss people off, but there's the oil and gas fields in Israel. See where they are? They're in and around Gaza. They're north of Gaza, which gets you into where they're attacking in Lebanon. Anyway, she threatened live streaming. They instantly stopped her car and arrested her. So this idea that you have privacy in the United States is, it's just it's a false belief. All right, so I guess I agree with that, Bill. I think he should narrow his focus to just the over-the-counter markets, including NASDAQ. Not the big NASDAQ stocks, but the smaller one. That should be a loose definition so the criminals can't manipulate it, but maybe anything under 2 billion market cap, roughly. And I'd be all for him nationalizing it. You don't need to have a private exchange. It can be government exchange. You might get a lot of women in there, and you might get a bunch of arrogant bureaucrats from the South or from Boston, but at least it'd be nonprofit. I think PSLV that MLGO did amazingly. Absolutely amazing. A lot of volume. But you can see it's it's now up to its 200-day moving average. I'd be skeptical, but something's going on. That's some short covering. Maybe that's coming to Finger or one of the other stocks. All right, I'm going to probably end here in 6 minutes because Ham comes on in an hour, and I want to give you a chance to look, I mean, it's a similar thing with Finger. It went up to the 200-day moving average. It's pulled back. Maybe it's getting ready for another rally above that. That's what I would think. Go to 180, $2, 220, maybe 240. I told you guys about PSLV down below that red line. That's where I told you about it. And I've been talking about it ever since. And it's breaking out. It's going higher. It's broken out over its previous high. You've got a double top that it's going to break out of. PSLV. PSLV. And the reg show list does not include offshore. No, that's right. The offshore, and they don't even keep track of the offshore. NATO wants us to support them. They join in. Hey, technologically spastic. I don't know if I have anything else. There were a couple of other stories that I thought were important. impotent. We're going to war. So the SPX reversed on the 20-day moving average, and it's setting up a massive down candle. It's not looking good. Fear is not everywhere, which contrary thinking means it's not looking good. I just think we're going to have one more run as the Fed pours money in. Another soldier confesses. Another Israeli soldier and veteran of Israel's ongoing war has admitted that he was party to war crimes. Quote, I am morally wounded. It is FUCKED up, to use citizens as your human shield like a dog. That's what the Israeli soldier said, using Palestinians as human shields.
בימים האחרונים בג"ץ מנסה לפלג את העם, פוסק דברים שפוגעים בלחימה, אבל אנחנו רוצים לומר במסר אחד ברור, אנחנו ממשיכים בדיוק באותה דרך, כי יש רק פתרון אחד לרצועה.
Let's move on. There was one gold surges to best start of a year since 1986 as stagflation scare slams stocks. Everybody's talking about gold and silver. That's usually not the best time to invest, but sometimes you don't have a choice. There is an article by Jim Rickards that just came out on his site, Daily Reckoning, Trump and the Fate of the Dollar. What is the Mara Lago Accord, and what would a Mara Lago Accord mean for the US dollar? I'm going to skip some words just to make it go more quickly. Mara Lago Accord is an echo of the three major currency accords since the Bretton Woods agreements in 1944. The first was the Smithsonian Agreement in 1971, after Nixon's decision to end the convertibility of dollars into gold. at $35 an ounce. The major countries in the system, US, UK, France, Germany, Italy, Japan, Netherlands, Sweden, Switzerland, Canada, Belgium, and Netherlands, met at the Smithsonian Institution in DC to decide how to reopen the gold window. Those countries again, the United States, UK, France, Germany, Italy, Japan, Netherlands, Sweden, Switzerland, Canada, Belgium, and Netherlands. Do you think those are the countries that are going to be deciding the next meeting on currencies? I doubt it. The United States will be, but I don't know. Don't know about the UK. Don't know about France. Maybe Germany. Maybe Italy, Japan, probably. Netherlands, I doubt it. Sweden, I doubt it. Switzerland, I doubt it. Canada, I doubt it. Belgium, I doubt it. Netherlands, I doubt it. The main U.S. goal was to devalue the dollar. In the end, the price of gold was increased 8.5% to $38, revalued to $42.22 in 1973, which represented an 8% dollar devaluation. Other currencies were revalued against the dollar. The effort to reopen the gold window failed. Instead, major countries moved to floating exchange rates, which is how it is today. Gold moved to free market trading and is currently about $3,050 per ounce. The gold price represents a 98.8% devaluation of the dollar measured by weight of gold since 1971. The period from 71 to 85 was tumultuous in foreign exchange markets, including the petrodollar agreement in 1974, the Herstatt Bank collapse, 1974, the sterling crisis of 1976, U.S. hyperinflation, 50% from 77 to 81. Remember, Jimmy Carter appointed Paul Volcker. It was Nixon and Ford who put in wage and price controls. Also including a gold price super spike in 1980, major global recession in 81, 82 under Reagan, and by 1983, inflation was subdued. The dollar was gaining strength. A strong economic growth was achieved in the United States under Ronald Reagan. He gets the credit. The next major economic gathering on foreign exchange was the Plaza Accord in 1985. This was convened by U.S. Treasury Secretary James Baker at the Plaza Hotel in New York and included the United States, Germany, the UK, Japan, and France. At the time, the dollar was at an all-time high relative to other currencies. The dollar had even strengthened against gold. Gold had dropped in price from $800 in 1980 to around $320 in 1985. The purpose of the meeting was to devalue the dollar in stages. In this respect, the meeting was a success. Importantly, the method of devaluation was to be gradual, and it was to be accomplished by central bank and finance ministry interventions in the foreign exchange markets. It was not a fiat devaluation, it was a finesse. In practice, market interventions were quite few. Once foreign exchange traders got the message, they took the dollar where it needed to go on their own. No foreign exchange dealer wanted to be on the wrong side of the trade if the central banks decided to intervene on any day. The Louvre Accord, signed February 22, 1987, among the United States, the United Kingdom, Canada, France, Japan, and Germany. Look, out of that list, United States, maybe Germany next time, maybe, but I bet the next time you don't see the UK, Canada, France, maybe Japan, maybe. But I'd be surprised if you see those countries in the next accord. The Louvre Accord among US, UK, Canada, France, Japan, and Germany was in effect a victory lap following the Plaza Accord. Between 1985 and 1987, the dollar did devalue against other currencies. The dollar also fell against gold, which rose from $3.20 an ounce to $4.45. It was mission accomplished for Treasury Secretary James Baker. The purpose of the Louvre Accord was to lock down the accomplishments of the Plaza Accord, stop further dollar depreciation, and return to a period of relative stability in foreign exchange markets. This accord was also a success. The dollar was mostly stable after 1987, despite the introduction of the euro in 2000. The euro bounced between 80 cents and $1.60 in the early 2000s. Today it's $1.09, which is not far from its original valuation of $1.16. The other wild card was gold. After hitting a bottom at around $250 in 1999, are you out of your mind? Gold surged to $1,900 per ounce in 2011, a 670% gain for gold, and a de facto devaluation of the dollar when measured by gold. Of course, that's when Bitcoin came in too. The period of relative stability in the foreign exchange markets lasted until 2010, when a new currency war was unleashed under President Obama. Genius Obama. So, which brings us to the discussion of a possible new international monetary conference in the chain of conferences from the Smithsonian Agreement to the Plaza Accord to the Louvre Accord. Given Donald Trump's dominance on the world economic scene today and his love of ornate architecture of the kind seen at the Plaza Hotel and the Louvre, Trump owned the Plaza Hotel. It's not a stretch to expect that Trump would convene any new World Monetary Conference at his equally ornate Mara Lago Club in Palm Beach, Florida. Hopefully they'll take the arrest warrant off of Putin so he can attend. And maybe the guys from Iran. In the first discussion of a Mara Lago Accord appears in chapter 6 of my book, Aftermath, James Rickards. I read that. I read all of his books. Published 6 years ahead of the current attention to the topic. The chapter is entitled The Mara Lago Accord and contains extensive discussion of the evolution of international monetary system starting in 1870. Including more recent accords above. It then moves through my private meetings with the IMF and the Treasury Secretary on a new gold standard, replacement of gold by special drawing rights. And it ends with a quote from Pierpont Morgan, quote, "Money is gold and nothing else," unquote, and recommends that investors acquire physical gold for their portfolios. Another quote I remember is, "Gold is money, everything else is credit." The dollar price of gold has risen 120% since that book was published. Today's vogue in Mara Lago Accord research began with a paper written by Stephen Marion titled A User's Guide to Restructuring the global trading system, published by Hudson Bay Capital. The article actually explains how currency devaluation can be used to offset the impact of tariffs and refers to persistent dollar overvaluation. There you go. They're just going to make sure the purchasing power of your dollar goes down. Should you own gold and silver, oil and gas, your own home, and your favorite dog? From there, it's a short leap to the ghost of the Plaza Accord and the need for a new Mara Lago Accord. I like that idea, the Mara Lago Accord. But you've got to let Putin come, probably Iran, India, China, Brazil. You know, there's a couple of countries in Europe that have gold, but most of the EU doesn't need to be there. Trump appointed this author, Miriam, as chair of his Council of Economic Advisors. In the currency section of the paper, Miriam suggests the devaluation of the dollar, but he also proposes that the United States issue 100-year bonds. I don't know why we didn't do that when interest rates were 0%. 100-year bonds will be attractive to foreign reserve managers and will reduce any dollar selling needed to prop up their own currencies. Those long-term dollar holdings will mitigate short-term dollar devaluation in a way that moves the entire international monetary system toward an equilibrium. Moran specifically uses Mara Lago Accord to describe this system. There's more technical details. Moran is trying to have it both ways. He wants to devalue the dollar and at the same time keep the dollar at the center of the international monetary system. Nixon did this in 71 and Baker did it in 85. With regard to Moran, one cannot resist a paraphrase of Laurie Benson. Stephen, you are no Jim Baker. The success of the Plaza Accord depended entirely on close cooperation of the major country finance ministries. No such cooperation exists today, given sanctions on Russia, tariffs on China, and the U.S. isolation of the EU with respect to the war in the Ukraine. Since Moran's paper, the topic has gone out of control. Some have proposed a gold certificate on the Federal Reserve balance sheet to revalue the gold from $42 an ounce to $3,000, with the profit, quote unquote, added to the Treasury's general account. Another idea is to use U.S. assets like land and mineral rights to collateralize U.S. debt. No one knows what a Mar-a-Lago Accord would actually be or even whether it will happen. Still, the best known version of the plan would have unintended consequences that could lead to a global financial catastrophe. There is no need to force holders to swap short-term debt for long-term debt. You simply let the short-term debt mature and replace it with new 100-year bond issues through the existing dealer underwriting system. No coercion is needed. There would be huge demand for 100-year debt. Dollar devaluation does not fight potential inflation from tariffs. There isn't any. It actually causes inflation by increasing the cost of imported goods, dollar devaluation. Any gold price markup on the Fed's books simply is an accounting entry. An audit of Fort Knox if it happens, will be nothing more than a photo op. Gold has a world price which is unaffected by games. The Mara Lago Accord, as it's envisioned today, would cause a financial crisis. That's because it would fail to understand the importance of short-term treasury debt as collateral for interbank lending and derivatives. Substituting 100-year treasury debt for short-term T-bills would make those bills scarce. T-bills are the most liquid collateral in the world and are at the root of the Eurodollar system and the 1 quadrillion derivatives market. Scarcity of T-bills would implode bank balance sheets and lead to the greatest banking crisis in history. The big winner in this context is gold. The BRICS are moving toward gold as quickly as they can. Investors can do the same. Don't be left behind. Using the women, children, I'm sure they never asked for war. You know, I don't know the side, Randy, that you're taking, but I listened to Larry Johnson. He's an analyst. He's older, so you might not listen to him. But he did a study of how many people, Israeli citizens, has Hamas killed over the last 25 years, 24 and a half years. And it's a horrifying number. It's 2,855 people. 2,855 Israelis have been killed by Hamas since the year 2000. 2,855. It's a horrible thing. Horrible. I'm not going to comment on how many Palestinians have been killed over the last 25 years. Fidelity will only let you buy ZJY all over the phone. That's interesting. That's interesting. Remember, ZJYL did a forward split, so that might be getting caught out. I'll go 10, maybe 10 more minutes. Because you have to get ready to call into Ham's call. All right, so XRP comes up again. I like XRP. I should maybe have somebody on that can describe it. I know that Junk Savvy is very knowledgeable on it. And I can surely recommend her Twitter calls. She's very good. I think it's a good bet. $2. Yep. Makes sense. Let me just see. There was something I wanted to show you, but I don't know if I took a picture of it. If I did, I'll show it to you. If I didn't, next time. I guess I can show you this. It's going to be controversial, but hey. What's controversy without risk? What is controversy without risk? Okay. Yeah. Yeah. What is controversy without controversy? What is controversy without controversy? Okay, so I need late information on finger. Ham has a call at 12:30, so you have to listen to him. You have to listen to him. All right, so this is going to maybe be controversial, but this is what's going to get us into World War III, and this is what's going to change our financial lives. Here is the great man talking about the new Middle East in front of the United Nations. That green is Israel. So everything you hear about, hey, they did this, they did that, they do this, it's all about moving forward on that goal. He goes on to say, the curse, he did this in front of the UN. The curse is Iran, Iraq, and Syria. The blessing is Greater Israel. This is Greater Israel's border from the Nile to the Euphrates. This is the goal. And it won't stop. It may not stop there, but it's not going to stop until they accomplish this. You'll see that Syria is almost entirely consumed. It goes up into Turkey, which I think is where there's oil, goes into Iraq where there's oil, and then Jordan, which the fat F from Ariel Sharon said that's where the Palestinian homeland is. And it takes all of Lebanon and a great part of Egypt. Here it is in another language. Quran, Israel, Jordania, Iraq, Syria, Libano, Israel, Egipto. If that helps, if you want to see it in English. You've got Israel going almost to Cairo, almost to Alexandria, kind of them to leave Cairo alone, and then going up into where I can't quite read that, but I think that's where Paul was born. But anyway, up into Turkey, most of Syria, most of all of Lebanon, most of Iraq, at least where the oil is. That is the goal. It's the blessing, if I can paraphrase it. That is the blessing. All right, 4 more minutes, and I'm going to sign off. All right, let's come up. Derail. Finger looks strong to me. I think finger looks like it's going to get to... I think finger's going to give you a chance to buy the dip, sell the rip, all the way up to around 240. And from there, we'll have to see if there's big buyers, if there's great news. if earnings turn positive, all things which really could happen. There's ifs, but the 240 range could be the new support, and we go higher from there. But I think it's going to be that kind of buy the dip, sell the rip with a little bit. I'm not saying the whole thing. And then Railtown, I think, the chart looks unappealing. I can't really get a chart on my system because they printed one trade at a penny, and it's not a system. It's just stock charts. So it ruins the reading. But I don't think Railtown looks great in terms of trading recommendation. On the other hand, it has not sold off. And we're waiting for a follow-on shoe to drop on the news they put out. You can go look on all of it on the Yahoo or over the counter. I think Railtown triples from here. It probably quadruples. I think when the news comes out, it goes to $1.20. And could it go to $3? Hell yeah. That's not a promise. That's a prediction. I don't know what any news is going to say, but I can't. It just becomes so repetitive. But Railtown was a R&D company who developed whatever it's called. It's not called software. It's called a learning model or something, AI, to help software companies locate problems, repair, and install new software in legacy systems. Just to be simplistic, it's over $100 billion marketplace. Railtown's the first to act. They're in the marketing phase, and it's a closed system. They're going from R&D, which is the hardest part of a startup. They're going from R&D, which took 4 years. They're marketing, and this is where the valuation jumps as revenue comes in. And we're at 30 cents here. I think as soon as follow-on news from previous press releases comes out, 30 cents, I think, becomes $1, $1.20. And I think that's just the start of the upside in Railtown. In the meantime, Railtown stumbled across this AI Partners. You can read it in the press releases, which is a venture capital network almost of 160 AI companies with $400 million in revenue. And oh, by the way, the two gentlemen that backed Constellation Software, which is now a huge valuation, I hesitate to say because my memory, but I think it's in the tens of billions of dollars. These guys are heavily involved. So it states in press releases they're going to roll up these companies. Remember, when you deal with anything with lawyers, time goes into, I think Eisenhower was wrong about relativity. When you go into a lawyer's office and engage a lawyer, that's when time slows down. The rest of the world, time goes by, but in a law office, everything comes to a screeching halt. The same thing is true with an auditor's office. And if you really want trouble, go into a regulator's office. So anyway, we're waiting. And the good thing is Railtown hasn't gone down really. I mean, it has, but it's not terrible. Here's regulators.
And eventually they made it to the north.
Here's regulators.
After that, NIXX devoted his life to getting back at the white man for the injustice of slavery by inventing the Department of Motor Vehicles. Sir, did you fill out the 1170?
I think I did.
Did you fill out the 11? Devoted his life to getting back at the white man for the injustice of slavery by inventing the Department of Motor Vehicles. Sir, did you fill out the 1170?
I think I did.
Did you fill out the 1170?
I filled this out.
That's the 1190. You're going to have to go stand in the blue line.
Look, I was already in that line.
Sir, don't get snippy with me.
Well, I've been here all morning.
That is not my prerogative, sir.
I wait in one line. They send me to another line.
You know what?
They send me
You
back.
can always call to make an
I try to
appointment.
call. I can't get
You can-
through. The line's always busy. It's
You can
ridiculous.
Go wait in the appointment line.
I don't want to
Sir,
wait. I've got
I
a job.
can't-
I don't
you're
have
gonna
all
have
day.
to-
I can't say this.
You're going to have to take that
Shouldn't be
somewhere
this
else.
hard.
All right, you know what? I'm on break.
So that's what's happening with Railtown is lawyers, auditors, and regulators. But I think we're at the end of that process. That started 5 or 6 weeks ago. You've got two of the greatest AI entrepreneurs involved. And the other thing is NSA is Canaccord and all the big investors they have, all the investors in Railtown, and then everybody associated probably with 120 companies, 160, sorry, they can invest while there's this investment banking deal, M&A deal, which has been announced. It just takes 4 weeks in Canada. I guess it's taking a little longer. So I'm very excited about Railtown. I think you can, as soon as there's some clarity, the buying comes in. And I use $1.20 as my target because there's some warrants there. There's nothing sophisticated in my target there. I mean, the number gets really big if you believe these guys from Constellation Software can replicate what they did before. But as a trade, I think you could see a triple to 10 times your money in Railtown. Again, trying to make a prediction, it's not a promise. There was a time, well, Billy Ray, you can see this is how we torture ourselves. We recognize on the one hand that there was a squeeze going on in GTII, but then on the other hand, we ignore that the criminals, probably Anson funds, hired Roger Rabbit out of Genius Brands, hired, I'm suspect, Jeremy out of CRTD, two crappy companies that all of a sudden had a lifeline. Do you think they were part of it? I don't know. And then hired these guys out of New York, I'm not going to say their names, to come get everybody to go in COSM. So in other words, the squeeze was going on, and the criminals criminally reacted to it, conspired to destroy it, and your response is, how did that work out? You're right. On the face of it, you're correct. Obviously, you're correct. But it wasn't because the signs of trouble weren't there by calling in. It's because Wall Street criminals fought back, and they have everybody on their side. I hope not you, but maybe you're also on their side. All right, let's see. Peace, love, and happiness. He's on Twitter. The call is there. Have a great weekend. What? I don't know. I don't like. I don't like that. I don't like that. That comes across to me as wrong. So I'm not gonna. But I don't know. I don't know what you mean. I don't want to say that you're saying anything wrong. I just don't know how to comment. All right. Thank you, Johnny. Thanks, everybody. I'm going to sign off. Go to Twitter. Look up under short. Just Google, just Twitter, search for finger motion, and you'll get Ham's because he's got so much that he posts, and dial into his call. But thank you for joining, and I wish everybody a bon Saturday, a bon Sunday, and peace in the world. Ciao.